So let's just look at markets, right? I've talked about CFA markets because obviously that's where a lot of the attention goes, and everyone has an opinion. But good to get the opinion of this group here. Richard, we'll start with you. What do you think? Short term, midterm, long term? Where do you see the markets going? And let's focus on the main markets, the US markets.
Sure.
But if you want to focus on some of the tier 2 markets as well, you can comment on those.
Sure. I'm probably the most qualified person in here
Okay.
about market. Would you agree?
I think so, maybe.
Yeah.
Markets, maybe.
So the short term, I think in the next 90 days, the market will continue to be pressured by the talk of inflation. I think the Fed is going to start talking about
tapering
the liquidity.
quantitative easing.
They slow down the quantitative easing because they won't. I don't think they will start increasing interest rate until all the method of quantitative easing is being removed. So that's another way that you can gauge. There's a lot of noise about when it's going to go interest rate go high, but before they go interest rate hiking, there's a lot of steps to get to there. So I think the 90 day, I think we'll see a lot of volatility. The market will continuously goes up and down based on the news. In midterm, I think we are in the midterm. I believe that the US market will be in a slow upward trend.
Yeah, but what sort of slow upward trend? What sort of growth numbers are you looking at?
I'm thinking about annual return about 12% for S&P 500.
12%.
Yeah, I think it's very very generalized, very stable compared to last year. So I don't believe the market is going to have a huge crash. I don't believe the market is going to have a huge rise, based on the inflation pressure we have at the moment. Long term, there's a few challenges that facing in the long term, right? The vaccines coverage, the COVID mutation. Well, there's a new COVID mutation now in Nepal and India that called Delta Plus, but when I'm reading it, the scientific journal, apparently the new way of creating vaccine is actually quite robust. So I believe that even there's a new mutation, I believe the vaccine will still able to counter it. However, it's the coverage rate, right? How far India can
Vaccinate the
population.
Yeah.
And also like the vaccination is good, but your cell immune system is not, in the sense that it's so many cases that people can reinfect by COVID. So India shouldn't be relaxed their guard, even though their number have dropped. Their number have not dropped to a point that you can go back to normal. That's my concern. That's why I don't believe India is doing the right thing. So I'm still in a short position in the index. But reflecting back in the whole world, I think the whole world in the long term is still in a good trajectory.
Yeah, so the worst is behind us, according to you.
Yeah.
What about you, Elijah?
I mean, I don't work in the market risk department, so I wouldn't be able to break into that details. But in my opinion, the short-term market is going to be volatile. I mean, people have different perceptions on when the economy is going to recover and to what degree it's going to recover. So I'll say that short term is going to be volatile. Midterms is probably because we sort of started we start entering into this recovery region. So I think midterm there's like a slow upwards market trend.
What about return for you? What do you think? According to Richard's 12%, you think similar or lower?
I think it's probably 7% or 8%.
7 to 8%.
I'm pretty pessimistic. For the long term, I mean, seeing the vaccines are really kicking in, and with the major markets like US and China, more and more people are getting vaccines. So I'm pretty optimistic about the long run outlook. So I'll say the economy is going to pick up like the global economy going to pick up after in 6 months. So yeah.
Yeah, so strong again with the long-term, short-term volatility. I think my opinion doesn't matter whatever I say or think the opposite happens. But so I need to hedge myself. But I think the key for me as well, short-term could be volatile, given what levels the markets are at. Whenever they're at peak, are they going to go for a new peak or are they going to retract? There's always a bit of tension. Inflation can persist throughout the year depending on how the numbers come. There's no doubt that inflation is here. In the numbers, we can see that already. How that much is going to affect the stocks, and we'll cover this in terms of like the sectors, whether the value stocks outperform or growth or not. But I think short term, I'll agree with you, is volatile. Midterm, yeah, similar. I think if I put a return perspective to it, it might just be as well with you 7 to 8%. I just don't see us growing faster than that, given how much growth we've already had. And long-term views, I can't really comment on them, but we know that over time, if you have a 5-year view, things generally are upward sloping. So the inflation and interest rate risk that we have is going to bite down. So we're still looking at a strong 12 to 15% annual growth after a year's point in time. Yeah.
But I mean, can I kind of make a contrarian point here that let's say if the PE levels are so high and where the price has already sort of factored in exponential growth over the next few years, then do you expect the market to continue kind of growing?
Yeah, it kind of depends on the index, right?
Like
the theory is that the index only has a survivorship bias issue where only the best survive and are there. And say if you're following Dow Jones, the top 30, and the best companies will always outperform regardless of what conditions are presented. So over a longer period, the index has to keep kind of going towards that.
About PE quite specifically, right? The PE is over. It's now for some company on one extreme, for some company on the other. But the PE could also be inflated in different reasons. Could be the price inflated, or could be the
earnings are
too low.
Yeah.
So for some of the company, we see the price are too high. For example, some of the tech company.
Yeah.
But on the opposite scale, we see that the what you call it, the travel industry.
Yeah.
Or the tourism industry. You see the aviation industry that the earning is too low in the temporary
situation, market conditions.
So you can't just use PE on. You have to separate them.
No, but I'm kind of making a general statement that considering how high the markets have
gone, you're kind of looking at
from
the
the
CAPE ratio,
pre-COVID
isn't
levels.
it?
So I think what I'm saying is that the market pricing has already factored in.
It's always forward-looking, so it's already baked in.
For some of it, but I think for the aviation industry, hospitality industry,
you think it's still underpriced?
I think majority of them still underpriced. Like I'm still holding significant amount of Boeing and American Airline. So what happened is the market you may not see the index drop because the index have both category of stock in it. So what happened is the rotation. Like people are selling their tech stock or growth stock to move into value stock, because the value stock, the earning will start pick up once the trend will come back. So overall, impact on the index will be removed or reduced.
What about you, Link? What do you think? Let's just go a bit faster, given we've more topics to cover. What do you think? What's your opinion on the?
I probably just contribute to the consensus view that it's going to be volatile in the short term. Really, inflation is the kind of keynote here. I mean, with the Fed's more hawkish tone there, I mean, they've got forecasted in there, I think, rate hikes in 2023. Tapering of the QE program is potentially something that's on the cards. The RBNZ in New Zealand have also potentially going down the same course with rate hikes forecasted into next year, slowly wrapping up to 2024. So that's my kind of short-term view. It's the same with really the consensus here, and really the mid to long-term. I'm giving a kind of return target, probably the long-term average of probably 8%. I agree with Elijah and Manoj on that. Pretty agnostic on any sort of any particular direction otherwise. And it's just really the same pressures you're looking at. Rollout of vaccinations, looking at how the economy picks up once travel starts continuing, but there's not too much to add in that regard for me.
Yeah, what about the role of taxes and move to clean energy? Devash, do you want to touch on that topic as you discuss this? Because that should be the focus. The vaccine to me is kind of historical. Yes, there are challenges with the mutations, but really the forward-looking view, especially the Biden government, is more focused on infrastructure and building, at the same time focus on energy. And those stocks have really taken a beating. Well, they grew up a lot last year, but this year you've seen some of those ETFs really crash. So what do you think in that regard, and your outlook on the short term as well?
Well, look, I think my outlook for the short term is sort of kind of driven by this whole discussion going on about inflation. Whether the inflation is going to be transitory or it's going to stay around, I don't believe the Fed when it says that it is going to be transitory. Generally, inflation tends to be sticky, and I think this could be the perfect storm where you kind of have supply chain disruptions, where you have record high commodity prices. So while commodity prices have come down slightly in the last couple of months, I believe that resurgent economies around the world, I think it may just end up being a perfect storm where I think all the central banks around the world are going to be behind the curve, and then maybe in a year's time they'll be playing catch up. So I think very soon you're going to see inflation getting priced into the bond market. So currently it hasn't been priced into the bond market. So you may have noticed that after the FOMC last week, where the Fed announced that they were looking at having 2 rate hikes next year or in 23?
23.
In 23,
yeah.
The 2-year rates went up, but the 10-year rates actually went down. Yeah. So the market is basically pricing in that that the Fed will act quicker as compared. So if they act quicker, long-term interest rates will come down because inflation won't remain persistent. However, I think that's a bit naive to say that. I think inflation is here to stay. And it's not like the oil shock back in the 1980s where as soon as oil prices came down, inflation came down. I think this is where if you have so much stimulus in the economy, like $4 trillion in the US
just
over
US
a period
alone.
of 10 years, it's going to stay around. And this is something that the equity markets haven't priced in. So as soon as the market starts pricing in that as soon as it starts pricing in higher inflation and subsequently higher interest rates, then the market will sort of correct itself. So I'm going to take a contrarian viewpoint that the markets might actually remain subdued over the next 12 to 24 months.
Yeah, so you're looking at basically it maintains at what levels it's at the moment.
But you also have to look into the stock market as an asset class. Yeah. So you see that the house price, because of inflation, it gone up. So inflation could both way on the stock market as well. It could be because there's so much money that the inflation pushed the stock price up.
Yeah, it really
like the wealth
makes,
effect. You mean that? Yeah.